In the meantime, let's get back to the big picture and the markets so far this year and welcome in our next guest. Robert Schein is with us, Chief Investment Officer at Blanke Schein Wealth Management. Thank you for being here.
Great to be with you again.
So how are you feeling when you see the markets bouncing back after a big sell-off like what we saw yesterday? Your thoughts on are people stepping in and buying the dips? Is that what you would be doing?
It's a great reaction that you're seeing, especially when Chairman Powell spoke today, and we're ending up on a higher note. So that's always what you want to see. The momentum is still continuing. Corporate earnings are there. That was the setup that we're continuing to see. And yeah, within there are even companies that are both strong on the top line as well as the bottom line. But this isn't a market where you go and buy sort of a passive strategy. This is definitely an active market for those who are in the industry, picking out some selective names to add some alpha or some total return to your portfolio.
So at this point, I'd love to break it down because you do have some picks and such here, and let's go over some of these names because you have maybe a more of a near-term outlook and maybe a longer one. Can you explain sort of near-term and longer?
Yeah, so the names that we like, they have three things in common. Within each business, they're diversified, so the diversified cash flows. The top and bottom line in both businesses are continuing to grow on double digits. So let's take Eli Lilly as an example.
Yeah.
Eli Lilly is not in the $1 trillion club yet, but it could soon be, simply because there's the three factors that they have. One is the diabetes drug, and they have a suite of offerings. They have the weight loss, and now, most recent research that just discussed, there is positive impact on Alzheimer's. So if you get all three of those, that's 123 million Americans just here in the United States that could be positively impacted by that. So you got a $5 billion marketplace right now that could be up to $100 billion by 2030. So we like it as a long-term hold. Obviously, it's run substantially even from last year and year to date right now.
Yeah.
But wait for it. Be patient. If you don't own it, healthcare is the way to be right now.
Yeah, because you said over the next month we remain cautious on the market. Yeah. So near term, do you expect volatility? Do you expect a little bit of a pullback?
Yeah, we can see a jobs report on Friday. We could see another economic report next week.
Right.
That could basically spook the markets. One way or another, if those numbers come in hotter, then the Federal Reserve sort of, cut is maybe pushed back off the table. Yeah. So that's where we could see markets reacting and multiples basically being adjusted as a result of that. So you want to be nimble and you want to be able to jump on those opportunities.
Yeah, because you said over the next 3 years, and maybe more long term, you are bullish, right?
Yeah, you're looking at it. There's a lot of pent-up stimulus still that was sort of front or back-loaded, if you will, from the Inflation Reduction Act in 23 and 24. That's where we're seeing a lot of that stimulus. You see strong in housing, you're seeing strong in employment, and corporate America, the earnings are there. So the efficiencies, I think, post-COVID, companies got stronger as a result of that. So we're seeing all that play out.
You also have Amazon on your list, right, as a potential winner or pick. And when you say pick, I mean, do you expect it to go up 5, 10, 15%? What is a pick to you?
Well, a year ago, Amazon has had a tremendous run, over 80% run. But if you go back 3 years on Amazon, they're part of a multi-year sort of turnaround story, internal efficiencies, if you will. Now, they're finally getting, again, the second wind. The efficiencies are playing out. You're seeing that both on the top and bottom line again for Amazon. But also you add in the AI component to what they could do. They layer that in across their businesses. And again, it's a diversified business model, diversified cash flows. Cash flow is king in this industry. So it's a great sort of long-term hold. I can't imagine not too many people not already owning it, especially if you're, let's say, in the S&P or some of the indices.
Right.
But if you want to step out and add to Amazon, it's a way to go when you see opportunity of it pulling back a little bit.
Yeah, you talked about Prime Video on there too. It's amazing. I couldn't believe last year when, I have a husband and 2 sons, so we pretty much have everything.
Yeah.
But I said it's amazing how if you don't have Amazon Prime, you could not watch Thursday Night Football.
Well, they have
I couldn't believe it.
It doesn't matter what company; it's all bundled and unbundled and rebundling. So I'm sure we've got multiple subscriptions to everything probably multiple subscriptions to Prime. We don't even know, right?
Yeah, well, that's true too. How about Berkshire Hathaway?
So in a market where there's uncertainty, right, which we always have in terms of the economy, you want a diversified conglomerate, but he also has a $167 billion war chest, right?
Right.
He did rebalance a portfolio strategically, and he took some Apple off the table, and he diversified into industrials. You're seeing that being diversified into healthcare. Those are now, those sectors, if you will, are sort of seeing that broadening out effect of the marketplace. So the Magnificent Seven last year, and what we need this year from the market at large to continue to move higher, is that rounding out effect. So Magnificent Seven, some money coming out of it, broadening out of the U.S. sort of all sectors of the S&P, which is healthy.
Yeah, and you do expect the rate cuts to start. I was actually looking at Fed funds futures. I mean, forget May and March and May. June 72%, July 89%. Yeah. You're looking to June and said money markets may become less attractive, right?
Yeah, you want to lock in sort of right now. This is that sweet spot where we know that the Federal Reserve is going to have to basically look for any piece of data that's going to support dropping rates, because it's restrictive right now, and he doesn't want to get too close to the election,
right?
Because that looks too political. So you're looking right now at June, maybe May if we get again some data.
Yeah.
But right now, the Federal Reserve is looking for any piece of information to start easing that cycle and getting that in there, so that it's not so restrictive moving into back end of this year.
Understood. It's great to see you. Thank you so much for being here today. Robert Schein of Blanke Schein Wealth Management.